So we're hitting that 9:30 opening here. Let's go ahead and quickly just kind of see right where we've been at so far today. So coming off of yesterday's price, we had mentioned, right, this buy side was kind of our interest. It was that swing high as well as just this right swing high here on the hourly chart. Let's see that. We had mentioned how we would look for this fair value gap, but also this potential fair value gap as well. So these are the two areas of interest here for today. Right now we're seeing how we've kind of created a little failure swing here. I'm going to just go ahead and peek at NQ. So NQ is actually taking that high. Okay. Dollar consolidating here. Not much help today. So yeah, we'll just see what we get, right? We'll see if we don't return into this fair value gap. Right now, this is kind of that drawn liquidity for me. So we have buy side here. Right, and we have sell side really kind of here. So this low. If we do want to just look at for today, sell side, right, notice here these relative equal lows, and this is actually today's low. So just marking out our right liquidity points for today. Remember, right, it's a Monday, no news. We have really no high impact news till Wednesday, so we'll have CPI on Wednesday. So I'm really not expecting much really these first 2 days, but right, we'll sit in and see what kind of price action we get. I also want to draw your attention to, go ahead and throw, so I knew we'd opening gaps, and then actually, right, put on the one for this week. So we take the closing price from Friday, here, and then the opening price here on Sunday. So this becomes our current new week opening gap. And all right, look at that. What did we reach into here? Right into that new week opening gap level. Just gonna go ahead and mark it. 5, 5, 5, 7. Cool. So now we got our new week opening gaps here. Let's go back to a 1, see what's up here. So you'll see right at 9:30. Here's our Judas swing, just shortly. Right, so we ran up to clear this little short-term high. Short-term high is cleared. Now we've broken structure. Traded into the new week opening gap. Right, we've cleared sell side. So from here, we just want to see, really, does price continue to gravitate towards lows? Right, so we have this low here. And just like I mentioned, right, this is that really external range liquidity. So let's go ahead and see how price plays inside of this new week opening gap here. If we start breaking underneath it, right, trading lower, then I would expect kind of that new week opening gap to act as resistance into the midnight open at least. But seeing how we've just cleared sell side, right, if we kind of find support inside of this new week opening gap, then we may get a potential retracement now coming off that. Bearish fair value gap here, so we'll watch that. notice here on that 2 minute volume imbalance. So we also want to see what occurs here. Right, if we are going to put in another leg lower, I would look for it to happen from this fair value gap. So if we start trading up and through, right, then we would just look for higher prices here. You see how this 2 minute kind of aligns with 2 1 minute fair value gaps, right? So this is the 2 minute overall, but then you can kind of refine that 1 minute to this mini fair value gap, as well as, right, we have a smaller one here as well. So now on the 1 minute, right, as we transpose lower, we have now these 2 fair value gaps, right, still creating volume imbalances on the way up. So you want to see, right, do these discounts keep getting created? And whether or not now do we push up and through these fair value gaps, or are they going to act as resistance for now, right, another leg lower here? I'm saying so far I like the way that we've created kind of volume imbalances. So this is kind of suggesting to me, right, higher prices. I'll have to see how the candles close. So at this moment, I'm just monitoring candle bodies. So I'm watching how, right, we've traded into that new week opening gap and we've cleared sell side. So at this point, if we're going to kind of just consolidate, we may, right, just run up to clear these little relative equal highs now. But right, waiting on the bodies. So wicks going up and above fair value gaps like this, right, we don't count that as a break of that fair value gap, right? We need to see candle bodies closing. Let's go ahead and run a little side by side. Interesting, right? So check this out here. NQ selling off heavy. ES, right? ES actually has been rallying. So already this morning, these two not in sync. Dollar, right? Like I mentioned earlier, dollar really not doing much, kind of consolidating here. But this is rather interesting, seeing this huge sell-off here. Right, because right now it's kind of making me think 2 things. So we'll talk through it. First is, if I continue to see this, where NQ now accelerates lower, right? Notice how ES is kind of holding its bodies here at these fair value gaps we mentioned. So if I'm to see NQ continue to accelerate lower, right, then that may lead to that 6 sister approach in ES, where now we'll start aiming for this low here from these fair value gaps. But if I see ES now, right, accelerate higher, we've just cleared the short-term low. So say this kind of was a manipulation move run on stops, and NQ now breaks structure higher. Well, then obviously, right, we would look for ES to follow suit, break through these fair value gaps that we're stuck at, and continue higher. So notice how we continued to close below this fair value gap, but now look what happened. We opened with the volume imbalance where exactly on the high, right? So not random. We go from the low of that to the high. But notice how, right, price is kind of stuck here just because we have these fair value gaps that we're fighting through. So if price wants to go higher, right, it's fighting through these little fair value gaps. So we just continue to monitor the candle bodies, right? We like that volume imbalances are forming because that, right, is bullish order flow. But yet we're still pushing through, right? We're pushing through this fair value gap, but we're not closing above it yet. So I really need to see that candle closure above, or else, right, this area will still hold us. Right, look at NQ. So NQ looks like it's about to make another leg lower, right? We'll just continue to watch, see if this swing low holds or not. So there goes another low on NQ. Still though, right, see how ES is holding this low, holding its new week opening gap. Right, so there goes NQ on that 5 minute. Let's go back to that 1 minute. So ES has returned into. Now notice this fair value gap here aligned perfectly with that new week opening gap. So now if I see this get broke, right, we're going to start targeting here that low like we mentioned. And from where? Right, that 1 minute fair value gap holding us. NQ really just creating multiple swing lows. So still forecasting that future scenario to where if at any point now, right after clearing lows like this, NQ gives an aggressive rally, that'll really help ES, right? Because NQ's kind of been trading lower. So if NQ can find some support, while ES is already kind of right looking stronger, it will help ES. But if we continue to just trend lower how we are, then we're going to look for ES to really follow suit, right? Look for this low here again. So that first tap into the fair value gap, we hold, right? We'll see now what happens here as we continue to test that level. Max number of people. Okay, Troy. So there's actually that Zoom link I shared this morning, right? So that should already be up and ready to go if you can't get the Discord video to get going. I had talked to Discord support actually yesterday, and they said they'll look into right that issue. So hopefully I have a answer for you guys this week. But yeah, that Zoom link should take you to the Zoom. So you see how we've traded through this now? Right, so we would just look for this low here. We gotta wait though, see if this candle closes underneath that 1 minute fair value gap. And just to point out, notice how the wicks, right, we always say wicks do the damage. So wicks reprice and rebalance the higher fair value gap. But look at that laser precision here, right, where the bodies refuse to leave the lower one here. And why is that? Right, that's because this is a mitigation block. So the video that we created, high, low, here, right, lower swing high, gets broken, leaving behind a small fair value gap. If I drag that out, you see how it's aligned with this low. So now that down close candle becomes our mitigation block. Right, and you'll see that precision here. And there's our delivery into that low. Right, notice how we did it with a volume imbalance. But where does this candle stop? Perfectly at that new week opening gap, right on that low. Right, so just that clear algorithmic delivery. We've cleared sell side, but price stops exactly at that new week opening gap low. And right, look what happens now. We bounce back up into that high. So you'll want to kind of be wary of this. The fact that we've traded underneath it and closed underneath it can often mean now that this becomes an inversion fair value gap. So we'll want to see if price continues now to trend lower. Right, we've cleared this sell side. So next target, as we mentioned, would be this low. Right, so this swing low just below the new week opening gap level. So boom, that low just gets digged into now. Right, next low we would look for. We have this low paired with this inefficiency. So this fair value gap. Oh, look at that. So what do we dig into there perfectly? Right now we're just really reaching into, right, all this sell side here. So in my mind, right, I would look for ES to at least deliver into the midnight open. Mike, you'd asked. Right, look at all these new week opening gaps. So yeah, sell side, right, if we're going to continue, these new week opening gaps are just going to act as a magnet, and it is paired with that hourly. So that wouldn't be a bad area to look for, right price to reach back up into here. This would kind of be that sell side inside of the hourly fair value gap. And right, notice how beautifully, so we called. After this candle closes underneath, we look for this to be an inversion. Well, where does this candle high return to? I mean, come on now, right? Perfectly to the high of that inversion. Respects the new week opening gap, breaks lower. And from here out, look at that. Tap that midnight level just as expected. And now we'll just continue, right, to see if we can't get deliveries into our sell side here now. So that will be low of day. Boom. You see how price is just reaching for these levels, right? Every time we're marking out these levels, it's like as soon as we do that, price just reaches right for it. Just nice to see that. And each time it hits it, you're seeing how we're having like a slight little hesitation, right? It's because these are algorithmic levels, so price is just pausing as it's hitting these. Right, so we've just cleared sell side. So right, that retracement there, that's going to be expected because we've just cleared sell side. For me, I would like to see though, really, since we're close to kind of this hourly fair value gap, if price wants to gravitate into that, or if it was only aiming for this sell side, right? Because right now we're at a new low of day, so we could see a retracement off of the low of day. I'm interested in really seeing how though this fair value gap here would hold, because it's under that new week opening gap, and right, it's under these swing lows that we kind of have just traded through. So I'll go ahead and remove the lows. Just highlight the area I'm kind of watching now here. So I'd want to see if this area is to offer resistance or not. Hourly fair value gap would be the right sell side target. Now, although I am watching here, right, this is an instance where we don't want to get too lost on lower time frames. So if we trade up and through this, that doesn't automatically mean that now I'm looking, right, for higher prices. For me, my kind of invalidation point for looking for this hourly fair value gap to get hit would be really this still kind of 1 minute inversion. So let me go to like higher time frames, volume imbalance, 5 minute. So I do like this, right? So notice how this candle holds at that midnight open. So what did we say, right? We trade into that fair value gap. And now we're breaking lower. And I'm looking at this one to hold for our current order flow and not any of these. Because if we have broken through and below the new week opening gap with displacement, right, and creating this fair value gap, well, now bearish order flow, right, should hold from here in the short term. So if we're going to reach into this and we're putting in that bearish order flow in this leg, well, now this fair value gap here is the one that should hold, right? And we're getting that now playing out beautifully. Boom. So as we've been seeing, what do? We tap that 1 hour perfectly. And I mean, look what that candle closes. As we say, right? Not random. Holding from where? That 1 minute. So good delivery here. No, I was looking for those lower prices. Whoa, who was that? So we've hit the 1 hour. We are still short though of the sell side here. So actually, let me go ahead and grab, right, we have 2 sell side pulls. Here's that second one. Jeez, well, what's going on with the chart? Chill out. So in the same way, right, we're still watching this. If I see this candle break structure here, although this can be classified, right, as a short-term high being broken, this is that instance where I'm not necessarily going to rely on this 1 minute market structure now at this point. To where, right, if we break this high, I'm not automatically going to switch my bias and start looking for higher prices. I would still need to see price now continue to push up and through, right, these new week opening gaps. Because we could run this high just to simply run more liquidity, return into the premiums in this leg here, and still deliver us into this low. Right now I'm just looking at that because the fact that this candle, these 2 candles, held perfectly at this 1 hour, just a little suspect to me. Right, so it's clean delivery like we like to see, but it's actually too clean in my opinion. Right, I mean, look at these lows just perfectly sitting there. So I'm kind of hello? Someone moaning? What is that? Someone getting crazy on the mic? But anyways, yeah, like I was saying, sorry. These lows here, just a little suspect. See how this 2 minutes holding up, right? So that 2 minutes still holding the midnight level. So we like to see that because, right, midnight level is kind of that power of 3. So if we're gonna look for lower prices, it can act as resistance here if we're underneath it. So I'll actually wait and see what this 2 minute candle does. So 2 minute candle still, right, we continue to remain below that midnight level. So that's favorable for these lower prices. Opening with the bearish volume imbalance. So we'd want to see now, right, this to remain open if we're going to look for lower prices. Price is too hilarious. Getting off to price. I mean, I just continue to point out, right, algorithmic delivery. So as we often say, once a volume imbalance gets created, we would look for the candle to trade into the right previous candle. In this instance, what does the high of this candle come in at? I mean, look at that. Exactly at the midnight open. Another volume imbalance. So at this point, after hitting this candle, I would really look for just this low to be hit now. So we'll see if we can't deliver that. Right, notice we have this volume imbalance. So ideally, I would really want this kind of volume imbalance to hold us. We're right near these, right, short-term lows, sell side. So I'd like for that volume imbalance to hold as well as that midnight open. I'm gonna go ahead and see. So NQ actually is right taking it slow, but we'll just continue to monitor this little setup here. So close above the volume imbalance. We're not a fan of that really, but we still hold right at that midnight. So where did this candle close? Right on the midnight open. I'm not a fan that we right closed in this volume imbalance. I would have wanted us to just reach into this low, but now we're giving us another retracement and see how we're using this volume imbalance as support. So this is kind of right when we're following order flow. If we're looking for lower prices, we would not want to see things like this to where price is right finding support at discounts and it's kind of disregarding premiums. But still, right, don't get lost. This is just 1 minute structure. So in that same way that, right, if we clear this high, we've now have equal highs here. What if I just show you that? So we have perfectly equal highs here. So price could still run up, clear these highs, right, still find resistance in this new weak opening gap area and give us another leg lower. So let's not get lost on that 1 minute. $9.45. Yeah, that's fine, Mr. Mike. That's valid there. Right, because we were explaining, we already looked for price to reject from this. So when we see price, right, holding those premiums, breaking lower, like I said, right, if this fair value gap gets broken, we would then become an inversion because it's also in line with that new weak opening gap. So once we close, right, that's a totally valid area to look to short from, because not only is it an inversion, but it's a new weak opening gap level. And then, right, your targets would simply just be the sell side we pointed out. And all that sell side's been hit now so far. So notice how we're just consolidating here. And why is that? Well, we've just cleared, like I said, right, we're at a new low of day. So it's Monday, we're trading off of the low of the day, right? So we're going to expect consolidation. And that's why, right, you don't want to get shaken out here and think that, right, price is about to start reversing, because it could very easily consolidate, create a manipulation move to run that consolidation, and then, right, retrace and return into sell side. Right, 15 and 5 underneath the midnight open as well. Created a volume imbalance on the 15 minute. So that may be interesting here later on in the session. Right, if we actually do start getting a retracement, we would just look for that area to potentially be the right target. Right, notice how the 2 minutes, so we're monitoring the 2 minute chart, and right, 2 minute bodies continue to just hold there. Right, so this isn't buying or selling pressure. Right, the algo is simply referencing this midnight open. We have just cleared sell side. Right, so if we're going to consolidate, it's just going to, oh my god, brain fart, bro. Reference, why could I not think of the word? It's just going to reference the PD arrays that are near it, right, closest to it, after delivering into a higher time frame target. So look what we're doing now. And we're still waiting for that the first half hour. So we haven't even reached 10 yet. So the first half hour of the opening range hasn't been put in yet. Go ahead and go side by side. Just see what the other charts are doing here while we're kind of consolidating. So NQ really in that same area. Right, we've trended lower. Now just kind of consolidating here. I guess we could look at dollar. Hasn't been much help so far, but yeah, same thing in dollar. Right, dollar really just back and forth in that consolidation. So we saw how like it cleared highs here, returned. Ideally, if we're going to want ES to go lower after clearing lows like this, we would want dollar to retrace higher again. So how it's kind of been going up and down. We'd want the dollar to start rallying, and then ES would hopefully right attack that sell side. And I notice it's 10 o'clock right now, so that first half hour of the opening range. So now this is kind of where we have to be wary, right? We spoke how just because, right, if price is to break this high, doesn't automatically mean now we're going to start retracing into all this buy side here. So we still need to monitor, right? How are these premiums here holding price? It's like on a higher time frame, right? We've just returned into a 2-minute volume imbalance here. Oh, actually, we haven't hit that area yet, right? So still fall short of this. Notice how we're still holding inside of this fair value gap. So I'm still kind of leaning towards, right, that invalidation point being really this fair value gap here. To where if we start breaking now back up and above the new week opening gap, well, then we may start trading higher just into some short-term buy-side targets. Right, as long as we can remain below this new week opening gap, my interest lies just at these equal lows now that we have created in that higher time frame, 1 hour fair value gap. At this point, we're kind of using this 1 minute now, right, as a potential little inversion fair value gap. And right, I'm saying that we're not necessarily looking for straight higher prices now. So if I go to like a 5 minute, so let me remove the 2 minute. Right, you'll see on the 2 minute we've now hit that volume imbalance. On a 5 minute though, right, notice that this here is the 5 minute fair value gap. So although there is like a 2 and 1 minute fair value gap lower on that higher time frame 5 minute, right, this is the only fair value gap that got left behind. And you'll see how it's aligned with the new week opening gap. So on this higher time frame structure, right, we could simply return into this 5 minute and then break from there, which is why I'm saying, right, we're not out of the woods and we're not looking for those higher prices. Here on this 5 minute chart, if I was to see, right, really this volume imbalance, so on the 5 minute, if we start closing above this volume imbalance on the 5 minute, really at that point then I may start looking, right, for those higher prices. Right, we're just watching, and so far what price is showing us is now, right, it's using here this 1 minute, right, look at the candle bodies after the first time trading up into it, it's using it as kind of an inversion area. And you see how this up close candle closed now above this. So notice this is the 5 minute volume imbalance, and it's actually aligned with this 1 minute here. So I'll just keep this 1 minute because it's actually the same as the 5 minute. If the new week opening gap, yeah, so really, right, if the new week opening gap wasn't here, say it was even like lower, say we were coming off of a new week opening gap, then I would really look for now, right, higher prices. It's just the fact that we are inside of this new week opening gap, as well as, like I mentioned, right, this 5 minute structure, that we have to kind of be wary of potential higher prices. But actually, so check that out, right, this 5 minute fair value gap. So this candle actually does close above that. So if I'm kind of just following what the market will show, right, and what I like to do, this 5 minute now may become, right, that inversion. So kind of 50-50 here. So I'm seeing how we've closed above this, right, and usually we would classify that now, that this would become an inversion. So we need to see, right, especially because it's aligned with that new week opening gap. Will that new week opening gap low act as support because now this is an inversion? And right, we're kind of seeing that here with these bodies. So if that's the case, right, we may actually start trading up into the new week opening gap high. Because I mean, right, look at that precision here. And notice how the candle bodies, right, as I always say, the candle bodies kind of tell a story. So candle bodies hold here, right, and they're slowly moving up. Once we trade above that new week opening gap, look how the candle bodies are holding at that new week opening gap. So we'll just have to continue to watch right, and see what we get. Let me go ahead and pull up the other charts quickly. Right, NQ now, left behind the little fair value gap here. As we said, dollar, after clearing that low, right, did rally and retrace. At the same time, though, ES was also going higher. Is that another option to watch? Is what another option, Bruno? Right, so notice we're still just hitting this volume imbalance. At this point, right, what did we respect here? Just that midpoint of that new week opening gap. So if I drag out, oh yep, Adam, good call out, right, which you mentioned. If I just drag out the midpoint, consequent encroachment, look at that precision, right? So we hit that perfectly. And now we broke back below this fair value gap with a volume imbalance. So we just want to see, do we start targeting and gravitating towards this low? Right at this time, price action itself is very right 50-50 because we have a sell set up here and now we've put in a little buy setup. But overall narrative, right, as we're relying on higher time frame narrative, well, narrative would suggest that this low, right, may be reached again, that this low is kind of in the crosshairs. So we kind of want to see, right, what plays out. We are above that midnight open. So right, we're going to have to fight through that level. If we're going to want to sell off, price is going to have to fight through that midnight open level, right? Because it may find support here. And just to reiterate, right, price action in this moment is very kind of 50-50 and choppy like this because we've already hit, right, that low of day. So all of this here was that expansion into, right, a higher time frame sell side target. So now after that expansion, we're going to expect consolidation. And remember, it's Monday. Okay, so I do like that this candle closed below the midnight open. Right, that's favorable for potentially lower prices. So we'll continue to monitor. Now do the candle bodies progressively continue, right, to trade below this midnight open level. And we've actually traded into a high time frame breaker. Like I'm looking at this on a lower time frame. And on the higher time frame, right, this structure here, so this high to this low to this high, once we get broken, right, these last down close candles would probably be a higher time frame breaker block. Let me see, probably a 5 minute. Yeah, so right, you see that 5 minute pretty cleanly. Here, 15 minute, 15 minutes the same, right? So all of these are actually aligning in that one area. Oh, I'm actually 30 minute. See, I don't really use the 30 minute, but we'll peep. Right, 30 minute as well. So you notice, right, that's also why price really hit that level almost perfectly. So it's a consequent encroachment, but it's also a breaker. Right, so we continue to close below. Fair value gap here. This has my interest. So I want to see if we dig up into that, right? Do we offer resistance from here? Lower. Damn, I really wish I knew who that was. Hello, hello, who was talking? So, yep, look for that sell side. Classic price, just tapping it, right? Creating equal lows. So now 3 equal lows. So there we go. Yep, reach into that. What did we tap here? Right, that's another sell side pull. So you saw how quickly when we first tapped it, price stops. Because it's just referencing that area. And right, look at that reaction. We'll see though, right, since we have all of these, do we want to give a low resistance liquidity run and just now kind of trade into all of the lows? So this low here is also a daily low. So this one, right, isn't really a daily low. This one here is. So this one has more of my intention. Go to a 5-minute. Right, because this is Sunday's low. Whereas this is just inner range liquidity. This is the external range liquidity. And boom. I mean, look how price gravitates to that. You see how it just sat there? That's just those algorithmic, right, signatures. So it gets yanked right to that low. You saw it, right? It sits there for 2 seconds perfectly. And then where does it retrace? Back above the 1 hour. Right, so this isn't random. And like we spoke about, right? Just because this high gets broken, we would not look for higher prices. Because these premiums were still here. And we understand this is higher time frame structure. So this little run, right, was simply that run on stops for these equal highs to return into a premium to deliver us another leg lower. Right, so that logic played out in real time perfectly as expected. And that's how you understand that higher time frame narrative is more important than lower time frame structure. You see, we create the fair value gap at 10. This one here. Yeah, you would see that as a BPR. Fair value gap with the fair value gap. And right, in that BPR video I mentioned, that's why I said it's rather kind of an advanced topic. Because a lot of the information out there on BPRs is just this, right? So that is a valid balance price range. To where if a fair value gap gets traded through with another fair value gap, right, he will classify that as a BPR. But then there's also, just kind of how I explained the idea of the BPR, right? That's another way to look at it. Yeah, Nab, there should be a Zoom link higher up. So if I'm looking at this, I'm kind of thinking that, right, we've cleared sell side. But in the same way that, right, when we cleared sell side delivered into this target, it was exactly, right, perfect delivery. A little suspect to me. I kind of have that same feeling here. So notice how we cleared all of the sell side. 1, 2. We left, though, this low intact. So now we have perfect equal lows here. And right, that kind of just, right, may be a potential area in the future. So we've cleared that sell side, cleared this sell side. And yeah, like I mentioned, right, just Sunday's low, equal lows here at Sunday's low now. And yeah, right, since that's a daily low, so it's really a 5-minute, 1 hour, whatever time frame you're going to look at, this is going to be equal lows. And as I mentioned, still have some of this fair value gap, new week opening gap lower. So if we're just going to repel, right, we've repelled from this current new week opening gap. So if we're going to trade from new week opening gap to new week opening gap, well then, right, we might look for that low to be targeted. And there we go, right, gravitating towards it now. It's comedy. Every time we say this, price just immediately goes for it. And I mean, look what it does now. So now we have another equal low. That's what I said, just suspect. Continuing to look for those lower prices. Yeah, we have equal highs, but see, Blaze, these are way up here. Right, so since we're already far away from this, we wouldn't expect price to reach back up into these areas until we start breaking through these premiums here. So now 1, 2, 3 equal lows. Volume imbalance. Watch that. All right, do we deliver if we trade into this premium? Reject, deliver into sell side. If we deliver into sell side, at this point, I would really look for right that new week opening gap too. So in my mind, it's kind of like a magnet. So if price is already in this area, it might gravitate towards that as well. Boom. So there's that Sunday low targeted. So now, right, our higher time frame sell side target that we called out here gets met. Right, we returned into that hourly fair value gap, aligned with all those new week opening gaps. And I mean, just look at how every time we're hitting some type of sell side, look at the reaction. Right, this really just goes to show how this stuff is right, not random, predetermined, pre-planned. So since we've hit this sell side, right, we may still hold here, but that sell side target was met. So now really, right, I wouldn't look for this volume imbalance to hold us. If we had fell short of that sell side before hitting this, then I would. But the fact that, right, the sell side target is met now means that we may start, right, attacking up and through these premiums. So potential SMT here now forming. We're gonna look at the lows. Higher low, 955 to 1017. 955, 1017, right, lower low. So now really on micro market structure, where my interest would kind of lie, right, honestly here. So I'm thinking that, right, we have now cleared sell side. We've cleared all our sell side targets. We've returned into a higher time frame discount while clearing a higher time frame sell side pool. So I'm thinking, okay, right, discounts have been traded into and we've picked up liquidity. So now if we want to return to a premium, right, well now we have this high, new week opening gap. Yeah, so I'd kind of be interested to see what occurs here. 1, 2, 1, 2. I mean, we have a little fractalized 1, 2, 3 drives. The only kind of thing that's causing me a little bit of hesitation is that I would have wanted the 3 drives to take place on like a higher time frame sense. So like we have 1, 2, right? This is all one leg. So if this wants to become that 3rd drive, as we were mentioning, into right that new week opening gap, that's kind of the one thing that's right, fully committing me to saying that we should hold from this fair value gap. But based purely off of that micro market structure, right? This kind of has my interest, and I would want to see if price finds support here. And now after clearing out sell side, it just wants to return into some type of short-term premium. So right, this new week opening gap, and really the opposing buy side target, only one would be here. Notice how that midnight open level still though, right, is offering us resistance. So that's another thing that we need to pay attention to, is that if we're going to start rallying up, we're going to have to now break through this, right? The same way that we said we would have to break through it lower. Once we close below, right, we deliver lower. So if we kind of get that same thing here, or after trading into that 1 minute fair value gap we mentioned, where we break above the midnight open, close above it, then we may start now gravitating back towards buy side. And right, we still have that volume imbalance just above it. So some premiums there as well. Yes, in my mind here, right, that's funny you say that, Mike, because I was literally thinking that as I was watching this candle form. Because right, no upwards wick, returns into a discount, clears sell side liquidity, gets broken with a fair value gap. Right, so it really gives me all the things that I'd like to see with my high probability order blocks. So right, the only thing that would prevent this is simply that higher time frame narrative. It's kind of as I was explaining. So this here now, right, is really that set it up to monitor. And you see how we're bouncing just between these two PD arrays. So that midnight open and this 1 minute. And right, price is really kind of analyzing, deciding which way now do we start to break. So do we want to clear sell side again? Or have we cleared enough sell side for the morning? And is now our interest higher? One thing that may give us a better indication is these next really 6 minutes. So at 10:30, well, at 10:30 we'll hello? Who's that? Oh, okay. But yeah, at 10:30, right, we'll really reassess and see what occurs. Because that opening range idea, right, if this low holds after 10:30, no, you're good, brother. It happens. Are you in the Zoom or the Discord? If I can ask. Okay, I figured her. Oh, okay. No, you're good, brother. No need to apologize. Let's see what other. Sorry, we mentioned how NQ also had that fair value gap. So this is the same fair value gap that we'll watch now on NQ. Which one here? Like high, low, higher, high? I guess which one are you referencing exactly? Yep. Yeah, definitely, right? Broken. Yeah, you can count that. No problem. But I'll say the one thing that could kind of give you some hesitation, right, is that the fact that we've already delivered into a sell side target. So if we've delivered into a discount already, right, then a lot of times these things may not hold up as we expect. But so far, we're just kind of talking about more future scenarios. If I do see, right, so we're speaking about that 10:30 opening range. If ES does make another low prior to 10:30, and NQ actually fails to and holds inside this fair value gap, that would kind of really add to the confluence that I would expect kind of a reversal here from this area. If NQ though really kind of disregards this fair value gap while ES does at the same time, then that just kind of nulls and voids that whole idea. Can we get much higher? So what did we hit here? What did we bounce off of initially? But that order block gives us a little bit of support. Have to continue and watch though. Right, do we break through that? Hit that low. Few minutes till 10:30. So see on that hourly, we just barely wicked that. And we still have some of this fair value gap left open. Just trying to get a read. So I really would like, if we're gonna kind of create that idea, I would want this low to be taken before 10:30. So really right now, or exactly at 10:30. So at the way that I kind of utilize the opening range, if we get past 10:30, this low still holds, and then we break that low, well then we may start returning just into these new week opening gaps here. Whereas if we actually click, okay, so look. So we've curated perfect equal lows. Let's see what NQ's up to. So NQ is approaching, now it's fully closed in this fair value gap. So right, we'll just watch from here. Let's kind of clean up the chart a little bit. So 10:30. Damn, so just to be right honest, transparent, I would have really liked, so this kind of right plays out as we were expecting, where we'd want that swing low to be formed. My issue here, right, so as much as I could see this pattern forming, and I still have those higher targets, I really don't like how we didn't clear that low. So we left that low intact, right? We created perfectly equal lows here. Which just right makes me a little bit wary of that. NQ's found support at that new, right, at its fair value gap though. And we still have SMT here. So yeah, this is really an instance where, right, it's tough because I could see this potential setup forming, and I do like the idea of now, right, since that opening range has been put in, potentially going up and kind of clearing out just buy side that we've been putting in so far. But as I mentioned, right, these equal lows are kind of just giving me hesitation. Let's see what dollar's up to over here. And right, the fact that, look at the dollar. Huge rally. Well, right, this really should be sending ES lower. So the fact that we're not going lower Thank you. Just really thinking. Just trying to pick a side. Trying to favor one over the other. But in this instance, I'm like, right, really can't favor one side over the other. And that's why, right, this is at low probability. But if we're just following order flow, right, so purely following what price is putting in. If we're going to remain bearish, it would, or bullish, excuse me, I would look for this fair value gap to hold. Because, right, we have cleared a short-term low. We have created a market structure shift with this fair value gap here. So this is the framework that should hold if price wants to remain bullish. But as I said, right, I'm not necessarily, I guess, fully 100% confident just because these equal lows. Right, if I had seen this candle run this low like we wanted to before 10:30, right, and then break structure, well, then I would be confident in trusting this because we've put in our opening range low, and now we would be moving away from it. Which, right, that still may happen because now our opening range low simply becomes these equal lows. So let me just bring up that opening range. So 10:30, 9:30. All right, so here's our opening range. So opening range high, opening range low. All right, so if we're going to retrace into this, these lows still may hold, and that's why you see sometimes, right, double bottoms do play out and equal lows don't always get attacked. Right, so this here still can hold us. But like I've just been saying, right, the fact that we created perfectly equal lows, that makes me wary of this setup. And say the setup was to play out, right, that's just something that I miss, and I'm fine with that because it doesn't fit, right, my rules for engagement. And look at that, right? Looks like we're gravitating back towards that. Boom. So look, right, we delivered to that sell side. And this right here, right, is how you prevent yourself from entering, right, on those losing setups. It's where we said, right, this sure is a model, right? This is the YouTube model and the pattern has formed, but we're not trusting it because of these equal lows here. Right, lo and behold, we do get, it looks like it almost wants to respect it, so we bounce, right, hold for a little bit, but then just disrespect that, trade through into the sell side, and what did we say if we're going to trade into this sell side? New week opening gap. And I mean, come on, fellas, to the tick. When you look at equal lows, do you place more weight on the 1 minute? Yeah, so I see why. I guess I would say, right, on the 1 minute chart, I am putting emphasis on these 1 minute lows. Because like you said, right, on a 5 minute, I mean, I guess I was really pointing out though how, right, on all the time frames, these equal lows here are the same. But yeah, like if we're on a 15 minute, right, it only looks like one swing low. And that's why, right, I like to use those lower time frames to give me clarity. So I really mesh the time frames to just give me the best picture and price. So now, because, right, let me bring up those opening ranges again. Because our opening range low was broken, so this low here gets broke, I may just, right, be interested in seeing if these other new week opening gaps don't just kind of get traded into a little bit lower. In the same way though, right, notice what we created here. So we come down, we create equal lows, we trade off those equal lows, and create equal highs. Hey, oh, that's not right. There it is. So we have equal highs here, right? So we've just delivered into the equal lows. So I'm just thinking now if price wants to reverse from here and hitting that new week opening gap, this buy side would be the nearest buy side target. Why didn't you trust the 1018? 1018. Oh, this one here. So this one here, right, we didn't trust because, as I said, we were still below that midnight level. So even though we had wicked underneath this, right, higher time frame sell side, it was a very shallow run. Right, so just barely wicked underneath it and then gave us that retracement hard. But understanding that we're still below that midnight open. So just because we're seeing these little breaks in structure, right, that doesn't mean we're going to continue in that given direction. Because on a higher time frame, this midnight open is still more important. So when we see, right, how price trades up into it, is respecting that midnight open, candle body's not even trying to close above it, right? That's just showing that price is going to remain heavy and give us another leg lower. And I was also looking at the idea of creating that 3 drives lower. So let me go from this initial drive was 1. This is 2. So this retracement here, right, simply a retracement to create a new swing high for another leg lower for that 3rd drive. Right, that's why we didn't trust this one. Just another false setup. And we've been forming a lot of these false setups recently. Right, I've kind of been sharing that on my Twitter to where a lot of false signals have been being created. So you really have to have a good understanding of higher time frame narrative to be right navigating. My new week opening gap for 4.7 to 4.9. How come you knew going up? Let me see here. Is my gaps messed up? Oh, can't even go that far back. 5 minutes. Nope, see, look right here. B4. So, right, this is the close on Friday, and this is the open on Sunday. So that's the 4.749. Now, right, just go back to the chart. That's where we are here. Which week's gap is near 40s? Near 40s. This one? This is the 331. So this is March, which I actually may remove this one now, right? Because we are in that week of May. So this is older than 2 months old. So actually, yeah, I won't necessarily. Yeah, I'm gonna go ahead and take this one off. But this was March 31st to April 2nd. But now that we've already kind of reached that, no, I'm actually gonna go ahead and remove those. But before we do that, I mean, come on, look at this. So what did we say? After clearing sell side, hitting a discount, what would we return into? Well, in the same way that we created equal lows to then run, we create equal highs to then what? Boom. And what is this now, right? So our 3 drives idea plays out to script. 1, 2, right? And that's why we said these setups here, false, not real setups. Simply engineering liquidity for that 3rd drive lower. And now, right, we have taken the first high. So now our interest really would be right this high here if we're going to continue. Yeah, I draw them by hand, brother. I'm actually going to take these ones off. We don't need them anymore. Wait, why do I have this one multiple times? Don't want that. Friday. There we go. So at this point, this fair value gap here, I would trust. Right, so this is where I would look for price to continue. Because now we have broken through the midnight open with displacement, and we have left behind a fair value gap. After creating the 3 drives lower and clearing sell side, higher time frame sell side, as well as returning into a new week opening gap discount, as well as a higher time frame hourly discount. So you see how all of these things are kind of coming together. So I would expect really this one to hold, which means this fair value gap here, right, becomes the breakaway gap. And why is that? Well, what is this really whole range? This is kind of that balanced price range idea that we spoke about. Right, so I wouldn't really look for price to return into here because you see, right, we've already passed through this area multiple times, back down and back up. Like if I drag out this little fair value gap, right, we create it initially here, deliver into it, up, back down, break through it again, create perfect equal highs, trade lower through it, and now pass up through it one more time. All right, so at this point, I'm seeing this is really balanced. So if price is going to continue bullish, I really wouldn't want us to return into here. Because in my mind, if we're going to return like all the way into here, I think that we may then just kind of continue to consolidate rather than actually give us an expansion into potential buy side targets. So I don't want to say that, oh, price isn't going to return here, because we never know for certain, right? I'm simply saying that if price is to, then I would expect more of a consolidation. Whereas if I want expansion into this buy side, this is the fair value gap that I would want to hold price. This one here, yep, nice or short-term low. Like if I just show you. So the short-term low has been cleared. Now this buy side here, right, is that market structure shift. I will say one thing that we kind of like to see is ideally, right, this candle would have closed above this market structure shift, right? Because we say, right, it's kind of a shallow run to where we would want to see more of a expansion through it. But the fact that we broke through the midnight open with that displacement is what's really making me kind of trust this setup here. So YouTube setup, fair value gap left behind, midnight open aligned with it should act as support now that we've traded above it. Right, simply targeting just buy side and really this new week opening gap. So new week opening gaps continue to act as magnets. So right, bouncing from this new week opening gap into this one, well, now we would look to bounce back up just into our current new week opening gap. Raja, I would suggest you just do them manually yourself rather than the indicators. Because then when you do that, right, it kind of gives you that experience of going in and looking for it and finding it. And like I mentioned, right, you could do this where I create the folders for it. So that way once you do have them, or once you do have them all set up, then if you don't want them on your chart, you can just turn them off. So like right now, I'll turn off April's because we're moving up and away from it. But right, we'll see what we get up in here. Two-minute. So look at that, right? Candle bodies tell the story. We're wicking lower, but what are the candle bodies holding at? They're refusing to even close inside of this fair value gap. So we're wicking off that midnight open and closing on this 1 minute right? So we should see expansion now. Beautiful. Clockwork. Right, this here, what are we returning into? Volume imbalance. So that's why we're seeing this now reaction. Because we're going to have to fight through these premiums. So if we can get above this, really clear sailing right to that new week opening gap and this buy side. This here is kind of what will be right the hindrance on price. So if we're going to reverse, it would kind of be from here. If we break through that, then yeah, I'd look for buy side to be targeted rather easily. Folders. Yep, Raj, folders right here. Right, so I think I showed Thursday or whatever how to make them. Cool. But yeah, that's how I go about creating them. It's very nice. Oh no, I can show you right now, Raj. So look, what you really have to do, like I'll go ahead and make this May one for you so you could see it. Right, so if I clear that, the May one goes away. So how you make these folders is you would just create your lines, right? So look for the, oh, where'd it go? Find the new week opening gap. So here. Right, so first you label them. And then the open. And then you're going to control click on both the lines. Control click, control click. Bring up your items tab. So you see that they're now highlighted blue. And then from there, you just click on this little folder icon, right? Create a group of drawings. Right click to rename it. So I name it May New Week Opening Gaps. And now any new week opening gap that gets formed in May will get put here in this folder. And then, right, it's nice because you could like lock them and stuff too, so that way they don't get moved. Look at that though. So back to our price action. As expected, what do we get? Fair value gap holds. I mean, we'd love to see that, candle bodies. We said, right, we would have to attack this volume imbalance. So we hit it once, offers us a little speed bump. But then, right, that's what we like to see, where we then blast through that. And we spoke about how if we did that, really clear sailing into that new week opening gap. And now just this buy side here. Silver bullet, baby. Let's see, for midnight open, rather a small range today. So for midnight open, you would really need this inversion high to get those 5 handles. But I think we could hit that. So now, right, this volume imbalance really should become an inversion. So if we trade back down into it, right, we should find support in here and deliver us into our buy side target now. And I mean, like clockwork, huh? What do we say? The volume imbalance will become an inversion. Hit it to the tick. And now what did we create here? Well, perfectly equal highs. So price has been creating hella equal highs today. There is a fair value gap here. So the fact that we actually didn't clear that high, I want to see us clear this high. So I would still really look for this volume imbalance, right? It's paired now with this fair value gap. So just look for that to hold if price returns into that. But ideally, would like to see us just now go ahead and up and through that, right? Return into the volume imbalance. So volume imbalance will act as a magnet on price. Oh, I put a, are you on Mac or Windows? So if you push, right, like in here, if you push Windows period, it'll bring up your emojis. So then you see this template button here on the bottom left. You click on that and you click save as. And then it saves it to the template, right? So now when you drag out, right? So this is a trend line that I'm using. So whenever I create a trend line, right? If I was to right click on it, go to template, now it has all these here, right? No problem, brother. And yeah, that's how I create all my just markings, right? For targets, sell side, all that nonsense. I know you, I think you mentioned that to me once. And I'm like, yo, I think I'll be quicker. Like you click and then go up here, which that makes sense too. And I used to do that. But I'm like, I feel it's quicker for me to just right click template. Or if I'm doing that compared to about the same. That's comedy. I might practice that method straight up. So look what we're doing here. Just creating equal highs. Heading into 11 o'clock. 10:50 to 11:10 macro. Let's see what we get there. Then we'll go ahead and wrap up today's session. As far as like CPI protocol, student, it's not as I guess a set in stone like my NFP one is. Like for NFP, I won't trade, right? That Wednesday, Thursday, or Friday. CPI, if there's no news on Monday, so like we didn't have any high impact news today. So if we have CPI Wednesday, no high impact news on Monday, I take Monday completely off. Tuesday, if I am looking to trade, it's simply more of a short-term scalping. Because I understand that, right? Heading into CPI, we may create some type of seek and destroy condition. So really Monday and Tuesday, they can be traded, right? But you have to be very nimble. So the way I trim my stops is, right, I wait for either partials to be hit or new structure to be put in place. So like this instance here, right, how we called out that this would be an instance that I trust, right? So a setup that I would take to hold. So we could say, right, say you entered on the midnight open, your stop goes below the candle that creates the fair value gap because we were expecting this to become a breakaway gap as we said. So now, right, as I see, like say I had partials here at this buy side target. Once those partials get taken, right, I secure myself partials. I then would move my stop to break even. So after securing partials, I move my stops to break even. Say we would have entered here, right, and I see us break above this volume imbalance. Well, at that point, I would have moved my stop to this swing low here because now this becomes a swing low that shouldn't be violated. So I'm either moving my stops after I've taken partials or I'm moving them after new structure has been put in place and I'm trusting, right, order flow to continue. Look here, fellas. Beautiful delivery into skadoosh. What did we say? It would reach into the buy side because the volume imbalance will act as a magnet. Lo and behold, right to the volume imbalance high perfectly. Look at that reaction. And what held us and sent us into that? Well, right, that inversion volume imbalance we pointed out. So now at this point, right, because buy side has been hit, we may consolidate the rest of the macro or even reverse. But we'll want to see actually, right, do we continue to just push up higher? Because that's also a possibility. And you see that's why, right, even though there's a fair value gap here. So let me go ahead and just remove this line. So there is a fair value gap here. But why didn't it get traded into? That's because we had this inversion fair value gap here, or volume imbalance here, as well as this wick, right? As we say, this wick trading off its wick, now breaking up and through it. This is a balanced price range, this high. And right, if I drag that out, look at that. So not only did we have that BPR, it was aligned with this volume imbalance. And that's why I was saying, right, if we trade into that volume imbalance, we'll hold there. So I'm also seeing that this BPR is there. For me, Jake, I do all my analysis on ES1. And that's just because, right, I found that the premiums and discounts that form on this chart get respected. I guess more often. I don't want to say more often, but I found it's just more precise than the actual like contracts themselves. And the way that price reacts to right PD arrays on this chart is just more true. So I do all my analysis on this and then enter my trades right on like MT4, CFDs. Just watch solely. So we've returned into this fair value gap now. So we'll see how we react, right? We could still bounce because we haven't hit it once yet. So we could still bounce from here and continue higher. But just understand we have cleared buy side and returned into now that premium. So we could now see price trade underneath and through it. But as I said, right, really already the targets that we were looking for this morning have been hit. So that hourly fair value gap. And now coming off that hourly fair value gap, right, our target was simply this buy side. So both of our targets get met. So now we just let price do what it wants to do the remainder of right, the day, the afternoon. If we're going to find support here, right, I would expect us to start trading up and above the new week opening gap. Right, kind of test this inversion level again. And then if we're really going to accelerate now, right, then we just have buy side left behind. So highs created during this opening range, right, we would see if they don't get just attacked. So check this here. What's this? I guess we have to wait and see how this candle closes. But we are potentially forming here a high probability order block. Well, we've cleared sell side, equal lows. We've returned into the discount. We've broken up and through it. Right, there is almost a fair value gap. That's why I'm saying we have to wait and see. So if this does become a high probability order block, this candle will actually remain where it is. This low should not be breached because that is how that fair value gap gets created here. Right, so we would expect this candle to actually close here. So it does. Right now, this becomes a high probability or B. So we'll see what happens from here. And this is also occurring right as we break up and through, right? So this is an old high that we have broken with that displacement and fair value gap. So right, the old high will act as support. So now when we see that high probability OB get formed, that's really why I would look for this area to hold us and just give us, right, see if we can't really just in the short term get to that inversion high. You'll notice how we're just smacking the top of this new week opening gap. So we're finding resistance at that new week opening gap high. So we'll need to see if we can actually break through it, right? Because we may kind of get stuck here inside of this new week opening gap, especially with what time it is. So don't forget about that. Right, 11:10 here. So we'll just wait for that macro to wrap up. So notice that this range from high to low, the equilibrium is just above this new week opening gap here. So that's also why I'm kind of thinking, right, if we're going to return just even into the equilibrium of this range put in so far this morning, well, right, we should trade up above that new week opening gap. And then that inversion fair value gap is right there as well. Right, so this is equilibrium. So we're just looking for a return into equilibrium. Volume imbalance. From here, I would want to see this candle. We've just hit that close. I'd want to see this candle expand. Right, if we close that volume imbalance, then we may just, as I say, continue to be stuck inside that new week opening gap. But the fact we're opening with this bullish volume imbalance, I'd really just want that to hold. But I mean, you'll see how, right, look at that precision that's holding price here. So it's really struggling to get above that new week opening gap. So it's just continuing to bounce. Gonna be silent for a few minutes. Gonna grab some water. BRB. Ba-da-bop. Ah, well, would you look at that? What did we hit? Equilibrium. Right, so we do break above finally. Barely. No bodies though. But what's holding price? That order block. Volume imbalance. So right, we would want to see just that expansion. So now we finally close above it. So now we should see price expand. Right, that now that we've closed above, at least until 11:10. So this macro period, it's really kind of reaching for just this inversion here on a 2 minute and on a 5 minute. Maybe this little inversion potentially. That volume imbalance right there. Volume imbalance. See if it remains open. Right, just hit the close. Yeah, at this point, right, kind of just going off of internal range liquidity. It's not any swing points, so we're just looking at inefficiencies here. I'm now looking at this down close candle here as what should also hold price. So if we're going to just continue higher, right, this down close candle should hold us. There's that inversion level. Bink. And at 11:10, we'll see what, right, so 11:10 now. Macro closing up. Let's see where we close it at.
Oops.
Yeah, so equilibrium, right? So the way I did it here, just taking the highest high. So the highest swing point prior to the morning session, right, and the lowest low formed. This becomes our dealing range. So if you just take a fib, high to low, right, drag it out. 50% is the equilibrium. So that's what I had. Right, marked out there. And also when you would, and I'm measuring this range, right? So I guess I can answer both of your questions. The time frame itself, as I say, I can see multiple time frames here on this 1 minute. So it's not like I'm measuring, right, the range because it's a 15-minute range. No, I'm measuring this range because it's our current dealing range from high to low. So I can measure it on the 1 minute. I mean, it's the same thing on a 5 minute, right? It's the same thing on a 15 minute. So the time frame itself, I guess, isn't really mattering. It's the actual leg of price. But like in the same way now, right, you can technically measure this range. So we're always creating new dealing ranges. It's a matter of what, I guess, you're expecting price to reach into. So since I was looking for potentially higher prices, and I'm understanding that this whole leg is our current dealing range, well, I'm just looking for now the equilibrium of that dealing range to be traded back into. And at 11:10, I mean, look at that, fellas. So to wrap up the macro, we close exactly at, right, that fair value gap on the 5 minute that I had drew out here. So real clean delivery. Yeah, I think we'll go ahead and wrap up that for today. as always, right, stay a little longer for any more questions or something like that. But yeah, I think today was pretty good delivery, pretty insightful. Hopefully it helped some of y'all. Right, you guys saw again in real time how to avoid getting faked out, right, by these fake bull signals. So always remember that higher time frame narrative. Right, you then saw what makes me really trust them. So, right, so we said wouldn't trust these. This one we do trust. And right, the one that we do expect to hold ends up holding. Volume imbalance, fair value gap we expect to hold ends up holding. Called out, high probability order block before it forms. Right, and that's very powerful because then once you understand these, that's how you know, right? Like we knew that this candle will remain where it was because in order for this to be formed as an order block, a fair value gap would have to form here. Right, so it really gives you like a freaking superpower to where I could almost see into the future. I mean, right, not only did we call the 3 drives, right, we called the fair value gap, we called the order block, right, we called price reaching back into the new week opening gaps. So just unreal precision that is found with these concepts. And I mean, look at this. So our inversion fair value gap that we called price would trade into, well, what's the high of this swing? Can't get more perfect than that. How would you practice? That's a good question. So EJ, what I would do, right, and this is kind of what I've explained a few times, is I would go in at the end of the day and I would mark up the trades as if I knew exactly what was going to happen. It's like, for example, right, I'm just going to go ahead and take everything off here right now. So remember, right, we've already hit all of our targets. We're coming off of that inversion. That's why we're seeing that. But let's say, right, the lunch session had wrapped up or the morning session was over. And even if I got chopped up, right? So say I was trying to trade early on and I was trying to buy these and I'm getting chopped up and it's a brutal day. At the end of the day, I go back in and I mark up potential setups as if I knew what was going to happen. So I would go in, right? And we'll just do it here. I would go, okay, well, this was a short-term low cleared. This here is a market structure shift. Okay, so that's the YouTube model. Nice. So right, this fair value gap here would hold. And then I just simply like create these chart markups. So then I say I entered here, right, my stop was below the candle that creates the fair value gap, and then my target was just, right, we could say like 5 handles or another premium or anything like that. So then I would mark up, right, I would take a screenshot of this and I would put it in my journal. And then on the side, right, I would type out like price traded above the midnight open. So it will now act as support. Right, and I would have all these things written on my charts. Because then when I go back and look, right, this is how you build that pseudo experience. So sure, you may not have actually taken this trade, but when you go back in and mark it up, right, your brain doesn't know any different. Especially when you mark it up as if you took it with your own words of affirmation. So now every time you look at this, right, it's almost like you're building reps without actually having to take the live trades. And you mean like I shared, right, I could even pull it up again quickly. Right, this here is really how I, oops. Sorry, fellas, back to it. So you should see, right, that notion that I had. And this here is just what I did every day. Right, so I would mark up how these played out, what instrument I was trading, right, buy, sell, percent risked, RR gained, date, time, stop loss and size, confluences that, right, were part of the trade. And then sometimes, right, I would put, so like FOMC, right, that way I could easily reference during FOMC what did price look like. Well, there we go, right, this is FOMC. And that's also how I learned over time, right, what occurs during FOMC, because these things play out more than once. So like when I have things like this, shoot. Back. There it is. yeah, it's just how I went about doing it. I mean, you'll see, right? I have, even in just this one, there's 175 trades I've recorded in this just one here. And I still had multiple other ones from years back. I've only recently stopped doing this because I even have some from this year. So you'll see that. I've recently only stopped doing this because I do those daily recaps now every day. So that's kind of my own journal, is that I'm producing these daily recaps for you guys. So by doing that, I'm almost going back and journaling it myself. Would you say that price moved away from the area formed between 950 and 1040? I mean, yeah, that's another good way to look at it, really. Right, is that this dealing range here is rather balanced. So this low to this, or this high to this low, really this low here. So like if I drag this out, right, you can kind of see this range is being balanced in itself, just because we've spent so much time right back and forth in this little area. I'd really kind of refine it to this one here. So this range is what I would really see as kind of that BPR. And you see it, right, once we trade up and close above it, we really don't dig back further into it too much. But in this instance, right, the thing that really made me look at it was just that 3 drives into a higher time frame discount. But yeah, you could say this is balanced for sure. And right, this here, this low, high, lower low broken, also kind of like a bullish breaker in a way. And then let's see what else. CY. Oh, yeah. So this is high probability, right? We called that out because why? What are the things that I look for to classify high probability order blocks? We have, right, returning into a discount slash, we'll just put PD array. We look for run on liquidity, so short-term low or short-term high. We look for candle body broken with fair value gap. And we also look for, what was it for? I had 4. Oh, okay, I was like, what am I tripping? No wicks. On the candle. Right, so these are the 4 things that I look for to kind of classify those high probability order blocks. So in this one here, right, we returned into this discount. So right, we're looking at this candle here. This is the order block. We've returned into a discount. We have ran equal lows. Right, so short-term lows cleared. We have broken above the candle body with a fair value gap. And this candle has no upwards wick, right? So no wick higher. So that right there is our high probability order block. And you see, right, price wicks into it, but look at the bodies. And if you watch that order block video, this occurs all the time, right? Well, the wicks will hit the order block, but the bodies will hold right at the fair value gap. Right, I mean, look at that there. Right, and from there, as we spoke about, right, just got that delivery into now. We were looking at the new week opening gap high, and right, we had dragged out that 5-minute inversion, which is exactly the high that we've reached. I mean, that's part of it. Yeah, and enigmatic. I guess I didn't necessarily add it to the 4 like this, but if I see it, this order block forming, right, we're inside of the macro period from 10:50 to 11:10. So if order blocks are forming inside of that time, right, that just adds to that probability. So you could technically, I guess, add 5 things. The 5th one's kind of like a, right, doesn't need to be there for it to be high probability, but just adds to that. So if it's formed during a macro time. So these things here are really what we are looking at, right, when determining those high probability order blocks. Now what tricks me is the fact, see, y'all got me. Well, we didn't, right, it didn't need to clear this high because it's already returned into equilibrium, right? So remember the range. That's why I said, right, if price wants to remain bullish, it could reach into this, but it doesn't need to. And that's why we had that 5 minute. So let me just drag it back out. Right, I had this here because we find support initially. So as we break through it, I'll just look for it to be an inversion. And like I mentioned, right, if we take just the range, high to low, it's just a little bit above that equilibrium. So if we're going to trade up into equilibrium and continue to trade higher, right, this would kind of be that next target for me. And as you see, right, we hit that level, pointed out, perfect precision holds. And now we're just gravitating back towards that new week opening gap. So you got to think, Bruno's, that it's already cleared, right? Buy side here, right? We're creating buy side here. So we've cleared a bunch of buy side and have already hit a lot of premium arrays. So price really doesn't need to, right, continue to just rally, especially with it being Monday, right? We wouldn't really expect to see extended price moves. So now that we've hit that higher time frame target, right, we would just look for a short-term bounce into a premium, and from there, really just consolidation like we're getting, right? That new week opening gap will continue to just hold price and right, make it gravitate towards that level. But yeah, I think then that was the last question. So yeah, I appreciate you guys sitting in here this morning. Right, not bad delivery. Tomorrow we will look to, let's see what time. Tomorrow we have still no high impact news tomorrow. So kind of will be the same thing we did today, right? So we'll get on just for equities open and see what price action itself gives us, right? Tomorrow is the day before NFP. So we'll just be a little, right, wary that it may be a consolidation environment, especially because, right, let me just bring up the new week opening gaps quickly. We'll kind of congregate in between these two new week opening gaps. So when that occurs, right, we may see just a range bound condition for a little bit between these two. New week opening gaps. Who's that? Is that something I wrote? New week opening gap. Oh, ICT. Well, that makes sense. Yeah, exactly, right? So good to know he's on the same page. Yeah, when we have new week opening gaps like that, right, we'd expect price to just bounce between them. And that's because price is going to continue to reference these areas, right? Even look here. New week opening gap to new week opening gap to new week opening gap. So maybe, right, back to that. But we'll have to see. Guys, we should make an effort to make the general chat. Yeah, it's up to y'all, CY, if y'all want to be more talkative. I know that some people enjoy kind of the quietness just because, right, there's been some other discords where it's almost a situation of like the blind leading the blind. So it is nice to have people to bounce your ideas off of. But it can get to a certain point to where, right, if you don't necessarily understand what it is you're doing and you're trying to get help from other people that don't necessarily understand what they're doing, not the best. But no, I feel that it is nice to have just, right, a little group to be active, share some markups and things like that. And remember, this group's only, heck, a month old. So pretty new in the grand scheme of things. So we still have time to build it up. Twitter is for that. That's comedy. Facts. Twitter is for that effects. OGs. Yeah, y'all could be OGs. All right, you were in the first month. That's hype. The OG group. Oh, own handles. That'd be lit, huh? Maybe, yeah. I don't know how to do that, but I could probably, if I could build that. Yeah, like if you were here. If you were a first month's joiner, yeah, you get the OG subscription. That'd be hype. Yeah, look at doing that. I'm not sure how to make rolls, but you know, YouTube's your friend. YouTube teaches whatever you need to learn. Check where we are. Just back to that midnight. So right, and let me point this out. This is pretty insightful for you. I don't know if many of you know of the event horizon PD array. The event horizon PD array is the midpoint between two new week opening gaps. So this is a new week opening gap. This is a new week opening gap. You take the midpoint. Right, that's kind of what Michael calls his event horizon, to where price, if we're in between these, is just going to continue to kind of gravitate in this area. So when I see that the midnight open is almost right directly between these two new week opening gaps, that's what leads me to say that we may, right, just consolidate here. Because now we're in between both new week opening gaps and we're near that midnight open. Anybody before April 30th? What's today? Yeah, I could give you that. Anyone that joined before April 30th. That's fair. Because yeah, the first day that this was open, I want to say, was like the 1st of April. I do feel kind of bad, I guess, because the people that don't get it. But hey, that's how it is, you know? I joined in March. Oh, bad. Okay. Yeah, Chris, I'll give you a pass. Yeah, decent. You were up. You were OG for sure. I did have like, there's like OGs where I did have a little group for a tiny bit. There's only like 4 people in there though. Let's see if they're in here. F98. Who else? We had SP. He was also OG. Mr. Frisky, he's not in here right now, but he's OG. I joined on April 30th. Solely, yup. Oh, nothing really, all due respect. We're just talking about if I'm going to make some, handles, like name handles for the people that have been in here, like the OGs. Right, so as time goes on, you'll kind of know who has been in the group for a while. Because I was just saying that this is my first, yeah, SP is for sure OG. I want to say the very first person to ever join though was F98, so he's the oldest of OGs. So you joined pretty, yeah, when did you? Oh, wait a minute. They got a lot of old people. Hold up. Okay. Nice. Well, yeah, fellas, I'll get that, yeah, I'll get working on that and creating that little handles for y'all. But we'll go ahead and finally wrap this up. Just been bullshitting. That's cool, though. I enjoy it. As far as this afternoon, don't really have much interest in the remainder of the day. If we... Yeah, really not too much interest, honestly. So we'll plan, yeah, just plan for tomorrow morning. If I am going to get on this afternoon just to watch price, I'll go ahead and send an announcement right half an hour beforehand to give you guys some time. But until then, everybody, enjoy the rest of your day. Be safe, and we will talk tomorrow. See you guys later.